Welcome to the Captain's Blog. I am Dave McDonough, Senior Vice President and founder of Flagship Wealth, powered by Trilogy. On this blog, we try to take what's unnecessarily complicated out there on Wall Street and make it understandable to you on Main Street. Last week, especially Thursday, one of the worst days in years. What happened? Jobs numbers came out. 200,000 jobs expected to be created. Over 300,000 jobs were. That's great news, right? Not for those out there that are expecting the Fed to lower interest rates to spur economic growth. Why would they lower interest rates to spur economic growth if they're fighting inflation, putting more fuel on that fire? Avid viewers of this blog know that we don't believe that that is the case and that the market is too optimistic that interest rates are going to go down. Did the market continue to sell off this week? Or did the FOMO trade, the positivity, creep back in? Here's your week in review. The Fed governors went on their tour. They talked about why interest rates shouldn't go down more. Now, I keep saying this to you folks. I keep repeating myself. But Wall Street isn't listening. Well, they listened on Wednesday. The CPI, Consumer Price Index, came in way too hot. It measures inflation above expectations. Now, folks, I've said this each and every week. For the most part this year on this blog, the market was too optimistic that interest rates would go lower, spurring economic growth. Well, the market now is repricing the fact the Fed can't lower interest rates at this point because that would fuel the inflation that you and I are still seeing out there on Main Street. And lastly, geopolitical risk. The Middle East isn't done. Israel assassinated one of the top generals in Iran. Oil has spiked, and we're waiting, and U.S. intelligence is also waiting for a counterattack. All negativity out there, folks. With a market priced at an all-time high, profit taking should be expected. So as I just said, as of this print, the market is down an additional 1% for the week. And here's what to look for next week. Thank goodness we can start talking about fundamental investing. What do I mean by that? Earnings season comes up. Again, companies let you know how they did in the previous quarter, and more importantly, how they're going to do moving forward. And that's why you're invested in the market, folks. You are invested for growth or growth potential. It's important to pay attention to these earnings reports, again, with a market at an all-time high. We're fans of active investing versus passive. That doesn't mean market timing. It does mean because I believe that the market is at an all-time high, it's time to sell everything. But I do believe that there is value elsewhere in the market, not some of the tech names that you're all chasing, not some of the media stocks that have been cut in half over the last 2 weeks. Be there before the rest of Main Street and the crowds get there. Consult your local financial advisor for more details. And here's your personal finance tip of the week. For you procrastinators out there, Monday is the last day to contribute to an IRA, a SEP IRA. Consult your local accountant this weekend for more details. And lastly, on a personal note, for those of you out there that are a part of Flagship Wealth Nation and have fee-based accounts, remember, we have partnered with Trilogy. And part of that partnership is that you need to acknowledge your risk tolerance and goals and objectives on a form, and as well as an LPL form that's required that you acknowledge that you're in a fee-based account. Consult us for more details if you have any issues with that paperwork. So thanks again for checking in. We'll see you next week on the Captain's Blog.